This conference will now be recorded.
Now let's talk about asset accounting today. Now this is very important from your interview point of view and from your project point of view, whether it is your implementation, support or rollout. For any kind of project, asset accounting is very important. Now here what we will do, first we'll try to understand basic org structure setup for asset accounting. If you are good at basic org structure setup for asset accounting, the rest of your asset accounting is very simple and straightforward. Your entire asset accounting understanding is dependent or is based on your basic org structure understanding. Clear? Now, if
Yes, sir.
you talk about asset accounting, you have ECC asset accounting and you have S4 HANA asset accounting. There are slight differences between ECC asset accounting and S4 HANA asset accounting. When we say slight differences, these differences only with respect to the system, not from the business. Whatever the requirement, whatever the process treatment that you do from business point of view, that remains constant, but only from the system point of view, there are slight minor differences between ECC and S4 HANA. By the end of our asset accounting configuration, you will be well versed with both ECC and S4 HANA asset accounting, including all the changes that are brought in or that are introduced in S4 HANA system. Now, before you begin your asset accounting configuration, there is a prerequisite for your company code. It's not like just like that you will start your asset accounting for your configuration. You have to ensure your company code has got proper configuration defined before you begin this. Now, what is your proper configuration as a prerequisite to begin asset accounting? Let us list out. Now, this prerequisite, whatever we are writing down now, is common for both ECC and S4 HANA. So let's put prerequisites for asset accounting configuration. First one would be baseline config for GL, AP, AR. This is your first level. What is needed? Baseline configuration for GL, AP, AR, which means in your company code, whatever you are going to define your asset accounting, we are talking only with respect to practice now. Okay, so for your practice purpose, you will have to begin your asset configuration only when you have basic configuration for GL, AP, AR, which means in your company code, you have GL accounts defined, you are able to post GL transactions. Similarly, accounts payable configuration defined, you are able to post vendor related transactions. Accounts receivable configuration defined, and you are able to post customer related transactions. Clear with these three?
Yes, sir.
Second one is your taxation config. So can be done later on also. Right? Taxation config is also a prerequisite, but this is not mandatory. We can do it later on also. When we say later on, by the time we are able to post a transaction in asset accounting, we should have done taxation configuration. Otherwise, we can still manage without a tax configuration. Third one, parallel ledgers. When we talk about parallel ledger, what do we mean? When you talk about parallel ledger, what exactly we mean?
Leading ledger and non-leading ledger.
Leading and non-leading ledgers. Mandatory. If you do not have leading and non-leading ledger, you are doing asset accounting configuration. It is not a genuine asset accounting configuration. Clear? Go on mute, those who are not talking. Fourth one, parallel currencies. When we talk about parallel currencies, what do we mean?
For group reporting, which currency we are using, and for company code, which currency we are using.
Local currency and group
Hard-weight
currency.
currency, index.
These two are mandatory. You can have additional currencies as many as you want, but minimum two currencies is mandate, because most of the clients that you take will operate with two currencies minimum, one local currency, one group currency. Next one is your accounting principles. What is accounting principle?
Reporting of financial as per the legal requirement of
Right? In short, this is your IFRS and local GAAP. Correct? Clear? These five are mandatory points to be enabled for your company code before you start your asset accounting configuration or your asset accounting practice. Without these five, if you are doing asset accounting, if you are understanding asset accounting, that is not a proper accounting, or that is not a real-time asset accounting. That's only a dummy asset accounting from SAP. Clear? Only when your company code has these criteria fulfilled, you're supposed to start your asset accounting config. Otherwise, strictly it is not recommended to practice asset accounting in SAP. Am I clear? Because it
yes.
has strong dependencies on these elements. Even though you can skip this, if you're skipping this and then proceeding with asset, then it's not real time, it's not genuine. That is not going to help you anywhere. Now, first what we will do, let us list out certain criteria or certain parameters. First one that I will do is company code. I want to know what is my company code. What is my company code, or what is our company code? AJ10 is the company code. Next one, we have already have baseline configuration. Taxation we have not done, but we have said that this is not mandatory, but this is required. But you'll have to complete this asset accounting, sorry, your taxation configuration before you are starting to post asset transaction, to ensure that your purchases, your sales are tax compatible. Company code we have written. Next thing that you'll have to write is ledgers. How many ledgers do we currently have? To check the ledgers, we have a table, right? So this is the table where we check your ledgers. You have to go to SE16N. Use this table FINSV underscore F4 underscore LDBUKRS. Give your company code here and then click on execute. You have to make sure how many ledgers are used or are assigned to your company code. Make sure you have one leading ledger, one non-leading ledger as mandatory. If you find only one leading ledger, then your asset accounting configuration is not accurate. If you find multiple ledger assignments here, let's say leading, non-leading, especially in your practice environment, you will find unwanted ledgers assigned to your company code. Okay, now you have to check if you have any unwanted ledgers assigned to your company code. If so, you have to remove those ledgers from your company code. Clear? You have to be very clear with the ledger assignment to your company code. If this point is not clear, your asset accounting will not be clear. It has a direct impact on this. How many ledgers we have here? Two ledgers. One leading ledger 0L and the other ledger non-leading, which is NO. So I'll put 0L and NO. Is this right? 0L and NO. Next one is your fiscal years. Are we using same fiscal year for both the ledgers, or are we using different fiscal years?
Different.
We are using different fiscal year. For leading, K4 is used. K4 is calendar. For non-leading, we are using V3, which is non-calendar year. In short, Jan to December and April to March. I'll put K4 and V3. K4 and V3. Next one, currencies. How many currencies are we using for our ledgers? This you will have to check from the ledger setup, FINSC underscore ledger. If you go to FINSC underscore ledger, first let us verify from the leading ledger. Pick your leading ledger 0L. Go to company code settings. Pick your company code from this AJ10. Double click on this. You will find two currencies which are currently used. One is your currency type 10, company code currency INR. Second one is your currency type 30, which is your group currency US dollar. So in short, how many currencies are we using? Two currencies, INR and then dollar. Agree?
Yes, sir.
Now currencies, I'll put INR and dollar. So we've listed parallel currencies, and then we need accounting principles. How many accounting principles are we using? So your accounting principles are again with your ledgers. For leading ledger, what is the accounting principle?
AFRs.
IFRS. IFRS. And for non-leading ledger, let us check which accounting principle we have used. Our non-leading ledger is what? NO. Go down. NO is our non-leading ledger. Go to your company code settings. Your company code. What is the accounting principle here? ICA, Indian Companies Act. Correct? This and ICA. Clear these points?
Yes, sir.
Now make sure whatever the company code you are beginning your asset accounting configuration, this criteria or this checklist is met, is satisfied. Anything missing from this or anything is not in connection with this, your company code is not fit for real-time or practical asset accounting. Let's say you have only one ledger, you have not defined non-leading ledger, do not use that company code for asset accounting. Okay, if you're not having two different fiscal years, do not use it. If you do not have two currencies, do not use it. If you're not using or if you have not connected accounting principles to your ledgers, do not use that company code. Make sure this criteria is met. Now, before we get into SAP, you have to understand something called depreciation calculation. This is very, very important before you step into SAP. How many accounting principles do we have?
Two.
Two accounting principles. One is your IFRS, the other one is Indian Companies Act. Is this right? Correct? Huh?
Yes.
Assuming, example, let's say laptop purchased for 80,000 INR. Laptop purchased for 80,000 INR. Now here one point that you'll have to understand here is whenever you purchase asset, you are going to purchase only one asset. Am I correct? We're talking about laptop purchase. It's a one laptop. Now this one laptop has to be shown or has to be represented in two accounting principles, in two accounting books. One is your IFRS accounting and the other one is Indian Companies Act accounting. When you are purchasing, according to IFRS, what will be the purchase value? 80,000? Yes, no?
Yes, sir.
Similarly, according to Companies Act also, it is 80,000. Agree with me?
Yes, sir.
Right? Because you have purchased only one asset, you have one bill. You have to ensure both are aligned. Now, next one, on any asset, there is something called depreciation. Agree? For every asset that you purchase, for every asset that you use, there is something called depreciation, which is the reduction in the value of asset due to its usage. I'll put depreciation. Here also we will put depreciation. Are we using same accounting principle or are we using two different accounting principles?
Two different accounting
Two.
principles.
We are using two different accounting principles. Now, one more point that you'll have to remember here is asset accounting is country specific and one of the localization object. When we say asset accounting is country specific, one of the localization object, the treatment of fixed assets accounting differs from country to country whenever there is a two different countries are in picture. Now, these two countries will have two different treatments of asset accounting. And if you're talking about a country, irrespective of the company, all the companies in a particular country will have to follow the same asset accounting rules because these are operated or these are governed at the country level. If you are using asset accounting in India, every company operating in India will have to follow the depreciation guidelines or fixed asset guidelines according to Indian Companies Act. Clear? Now, your Indian Companies Act will give you the guidelines for your depreciation, how your fixed asset will have to be depreciated. Now, this is your localization object. Let's say in India, can anybody tell how we have to charge depreciation? Is this based on percentage or based on useful life?
Useful life.
In India, the depreciation is charged based on useful life. You have to be very, very careful. You have to be very, very conscious at this level because tomorrow if somebody is asking you, they might ask you how your depreciation was charged, calculated in your previous client or in your previous project. If you were representing your previous client or your previous project as Indian client or as an Indian project, if you are telling that you have created a depreciation at 20% straight line, 15% declining balance method, and so on. In short, based on percentage, you are wrong. Because in India, there is no depreciation at percentage level. In India, depreciation is at useful life level. Now, India is IFRS or Indian Companies Act?
Indian companies.
Indian Companies Act. Here I'll put depreciation is equal to based on useful life. Now, let's say according to IFRS, depreciation is not based on useful life, it's based on percentage. This is based on percentage. Clear? According to IFRS, this is based on percentage. According to Indian Companies Act, this is based on useful life. Any doubt so far?
No, sir.
Now, right? Now, let's say here depreciation is equal to, I'll put 10% straight line method, and here I'll put depreciation is 5 years. Here depreciation is 5 years, here depreciation is 10% straight line method. Now, if I have to charge or calculate a depreciation, what will be my calculation? According to IFRS, how do I calculate a depreciation amount?
80,000 into 10%.
80,000 into 10 percentage. Is that correct?
Yes.
Yes, no? Now, how much it will be? 8,000. Agree? Now, according to Indian Companies Act, what will be the depreciation? How do we calculate?
80,000 divided by 5.
For your life, the formula is value divided by life. Here, in short, this will be 80,000 divided by 5. What will be the value?
16,000.
16,000. Now, if you look at this currently, one asset purchased for 80,000, one asset purchased for 80,000. In two different accounting principles, it is shown at the same price, correct? It is shown at the same price, but when it comes to depreciation, in one accounting principle, you are showing the asset depreciation as 8,000 per year. On the other side, you are showing the depreciation as 16,000 per year. Now, do you find a different treatment in depreciation? There is a different treatment in the depreciation. Agree?
Yes.
Now, there is a different treatment in the depreciation. Correct. Now, let's talk about something called net book value. Here, what will be the net book value after first year?
72,000.
72,000. In short, your net book value is asset value minus accumulated depreciation. Whatever the date or whatever the month you are trying to look at the asset value, on that particular month, whatever the depreciation you've charged till that date or till that month, you have to deduct it. Since you are looking for the first month, you'll have to, since you are looking at the first year, you have to remove first year depreciation from your asset value, and then you will arrive at the net book value. In short, at the end of the first year, according to IFRS, your laptop value is only 72,000. Agree?
Yes, sir.
And according to Indian Companies Act, at the end of first year, what is the net book value?
64,000.
64,000. Clear with these numbers?
Yes, sir.
Clear or not? Now, what we have done here, you have shown two different calculations on one asset, on an asset. In short, for one asset, what you have done, you have shown two different depreciation calculations according to Companies Act, according to IFRS Act. Is this clear?
Yes,
Clear
sir.
with what we have written on the Excel sheet calculation? Purchase value, depreciation method, depreciation amount, net book value in both the cases. Any doubt?
No.
Clear, right? Now, in the above, in the above two, in which currency are we showing the figures?
IFRS in USD and Indian companies are in INR.
In which figure, in which currency we have calculated this? The 72,000 is which currency?
INR.
This 64,000
INR.
INR. Do we have only INR currency in our accounting for our company code, or you have additional currency also?
Additional is also
You have additional currency also. What is that additional currency?
US
What is it? US dollar? US dollar. Now, when you post any document in your company code, what is happening? Each and every document, is this showing two currencies for every transaction or only one currency? Any transaction that you post in your company code, if you are using two currencies, local currency and group currency, each and every entry that you record in your company code will represent both the currencies. Value in local currency, value in group currency. Is my statement correct?
Yes.
Right? Similarly, even in your asset accounting, your depreciations especially will have to be represented in all the currencies. If you have two currencies, you have to show depreciation of 8,000 or net book value of 72,000. These numbers must be represented in your dollar also. In which currency?
Dollar.
Dollar also. In short, IFRS will have to show how many values? One or two. IFRS should show how many values? Single value in INR or two values? One in INR, one in dollar.
Two, I guess.
How many? One or two?
Two.
Two. One value should be represented in your INR, which is a local currency. The other value should be represented in your dollar, which is your group currency. Similarly, for your Indian Companies Act, you have to show one currency or two currencies.
Two.
Local currency INR and group currency dollar. In short, depreciation values must be represented in four currencies. Right? Now, two in INR, two in dollar. Correct? Why
Yes.
two in INR?
Only in company code currency and one is in group currency.
One for your no. Why two in INR?
One for
One
IFRS.
INR will represent IFRS. One INR will represent Indian Companies Act. Correct? Similarly, why $2? $1 value will represent IFRS. The other dollar value will represent Indian Companies Act. Is that correct?
Yes.
Each depreciation calculation is represented in the depreciation areas in SAP. Now, how many depreciation calculations we have to do overall? 1, 2, 3, 4, according to our current setup. How many depreciation calculations we have to do? You have
Two,
four
sir.
options. 1, 2, 3, 4 calculations. How many calculations we'll have to do?
4, sir.
Hmm?
4.
2?
4
Why did we
depreciation.
write 4 here then?
One is for IFRS, one is for
Depreciation.
Indian companies.
IFRS how many?
IFRS
How many
2
for
and Indian
IFRS? 1
Companies
or
Act
2?
2. 2.
Companies Act?
Calculation method. You are talking about calculation method or
When you're
depreciation?
calculating, you're going to show the depreciation number. When you're calculating depreciation. When you calculate depreciation, you are going to show depreciation number. Yes, no? Now I'll say this is my depreciation calculation for IFRS local currency. I'll say this is my depreciation calculation for Indian Companies Act local currency. In the similar way, should we do the calculation for IFRS dollar, Indian Companies Act dollar? Yes, no? Yes or no?
Yes, sir.
If you look at your ledger, for your ledger, how many currencies are we using?
Two
2.
currencies.
If I am calculating my depreciation here, let's say whether you take Companies Act or you take IFRS, you must show the depreciation calculation and the depreciation posting on your company code currency, which is INR. Similarly, you must show your depreciation calculation, your depreciation number in your group currency dollar, mandatory. No other exception for this. Now, each depreciation calculation and depreciation figure is represented in depreciation area. Represented in what?
Depreciation area.
Depreciation area.
Depreciation area. Now, for non-leading ledger, how many depreciation calculations we have to do? 1 or 2?
2.
Why 2?
One in INR and one in USD.
Right, you have to do 2 because your ledger is using 2 currencies. If your ledger is using 3 currencies, you have to show your depreciation in 3 currencies. If your ledger is using 10 currencies, you have to show depreciation in 10 different currencies. Clear? Now, does this have a dependency on your ledger based currencies or not?
Yes, sir.
If my ledger is having 2 currencies, if I say I am fine with only one, system is not okay with it. System will stop you. Okay. Now, similarly, for your leading ledger also, you have 2 currencies, company code currency and group currency. For leading ledger also, you need 2 depreciation calculations. In short, 2 depreciation areas. Correct? Now, first thing that you have to understand here is number of depreciation areas to be created for your company code. If you are able to understand this, you have understood half of the asset accounting. If you are able to understand this one point, you have understood half asset accounting. Now, let's put your company code is AJ10. How many ledgers you have? One or two?
Two ledgers, two currencies, two accounting principles.
Currencies you have two. Accounting principles you have two. Now there is a straightforward logic here. Depreciation areas is equal to number of ledgers into number of currencies. This is mandatory. These are mandatory depreciation areas to be created. Clear? This is mandatory. So now how many depreciation areas we have to create according to this logic?
Four.
How many?
Four.
In short, number of ledgers 2 multiplied by number of currencies 2. In short, 4 depreciation areas to be created. Agree? Clear? You have to create 4 depreciation areas. What are those 4? So one you will say IFRS, local currency, IFRS group currency. Next, ICA Companies Act local currency, Companies Act group currency. Agree?
Yes, sir.
Agree with me? These are the 4 depreciation areas that we need. Yes, no?
Yes, sir.
Now, IFRS is what ledger? Companies Act is what ledger?
IFRS 0L. And
This is your leading
Indian
ledger,
Companies Act is
0L. This one, NO. Correct? Is this correct?
yes, sir.
Now, depreciation area is a 2-digit numeric number. What is depreciation area? It's a 2-digit numeric number. You have to create your own depreciation area. How you will create it is your choice, but it should be in the increasing order only. Which order? Increasing order. Let's say if I say, okay, I'll put here, if I say IFRS local currency is depreciation area as 1, or if I say 2-digit, it's maximum 2-digit, you can use a single digit also. Let's say 1. And next one, IFRS has to be the greater than 1. It cannot go less than 1. So it's my choice. After 1, there is no rule I have to use 2. I can use 20 also. It is my choice. And after this, if I use local currency, I am not supposed to use 15 here. Why? Why I cannot use 15 here?
It's a decreasing number.
Because it's a decreasing number. I have to follow the increasing sequence while creating depreciation area. So I have to use from 21 onwards any number. System is not going to stop you as long as the next depreciation area is greater than the previous depreciation area. If the previous one is 20, it has to be greater than 20. It cannot be less than 20. How you are going to decide the number is your choice. Okay, let's say I'll put 21 and I'll put 30 here. It is my choice. Clear?
Yes, sir.
Now, ledger assignment is mandatory for each depreciation area. What is mandatory?
Ledger
Ledger
assignment.
assignment is mandatory for each depreciation area. Why it is mandatory?
Know the currency and accounting principles.
No. When you're
BCC for
calculating the
reporting.
depreciation, do you have to post this depreciation in your accounting or not to your P&L? Yes, no.
Yes, sir.
You have to post this depreciation in your accounting.
Yes,
Now,
sir.
system has to understand what amount to be posted in your accounting. For that, your depreciation area must be assigned to a ledger so that system understands, okay, this amount I will post in the leading ledger and this amount I will post in the non-leading ledger. Now, this is very important in S4 HANA. Ledger is determined based on accounting principle. How ledger is determined in S4 HANA? Based on accounting principle. Based on accounting principle. Let's say if you see this in the ledger, what is this ledger? This is non-leading ledger NO. This non-leading ledger NO is assigned to which accounting principle?
Indian Companies Act.
Indian Companies Act. On S4 HANA system, you are going to tell the system that this depreciation belongs to Indian Companies Act. The moment you tell the system that this depreciation area belongs to Indian Companies Act or ICA, system automatically detects your ledger as NO. When you give this, system takes this. Clear? You are going to assign Indian Companies Act to your depreciation area. Based on this, system is going to trigger your ledger NO. This is exclusively in which system? In S4 HANA system. In ECC, ledger is directly assigned to depreciation areas. In ECC, what we will do? You will directly assign the ledger to the depreciation areas. But in S4 HANA, do we assign ledger to the depreciation area directly? Yes, no. If you read this line, are we assigning ledger to the depreciation area directly or we are assigning accounting principle?
In HANA accounting principle, Ajay.
But in HANA, it is based on the accounting principle. Your accounting principle will determine the ledger. Now, whoever is going to ask you the questions, they will be very specifically asking about S4 HANA changes. This is one of the major change. Now, till here you have to understand first. Okay, if you are able to understand and if you are able to read through this, explain it back without any confusion, asset accounting is nothing. It's very simple, it's very straightforward. If you are confused here, if you are not able to get the logic here, you will not be able to understand the asset accounting practically in the system. You will be able to do the configuration, but you will not be able to understand conceptually, which means different scenarios, different cases, issues, calculations is very difficult for us to understand if we are weak in this. This is the basic fundamental to do your asset accounting. Clear? Okay, go through this. Let me stop this here.